Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
Tesla is running into some serious competition in China for electric vehicles. Even though Tesla dominates the market in the United States, it is no longer number one in China. A company called BYD has jumped from 13th place in China in number of vehicles sold in 2021 to number one in 2022. It has sold 1.8 million cars, electric vehicles, in 2022 versus about 1.2 million for Tesla. The reason BYD is doing so especially well in China is they are vertically integrated. They make their batteries, a lithium battery, where lithium, about 70% of the world's lithium is refined in China, whereas Tesla has to outsource their batteries. So you have this vertical integration, stable sourcing for BYD. BYD's cars are priced below that of Tesla. BYD is aiming for a lower end of the market or a middle end of the market, whereas Tesla historically has focused on the luxury end of the market with higher prices. Within the past year, Tesla has lowered their prices twice within China, and BYD has actually raised their price once, and yet for the comparable model car, BYD is still lower priced in China, about $30,000 compared to the Tesla $35,000. Now, one advantage Tesla has over BYD is the greater profitability per car. Their profit margin is something around 25%. BYD is only in the neighborhood of about 10%, but rapidly growing and a major concern, or should be, for Tesla. The story about BYD is actually very interesting. It was virtually discovered by Berkshire Hathaway, Charlie Munger, in 2008. A very successful investor named Li Lu, who came from China, recommended to Charlie Munger, who was vice chairman of Berkshire Hathaway, that Berkshire should invest in BYD. Charlie Munger, in turn, convinced Warren Buffett, the chairman of Berkshire, to make a $230 million investment in BYD for a 20% stake. That 20% stake grew in value in 2022 all the way up to $9.5 billion. That's the equivalent of a compounded annual growth rate of 30% a year over these 14 years. Starting last year, Berkshire started to sell off some of those shares and indeed has sold off about 50% of its stake. Charlie Munger has sold off a small amount of his stake as well, but is holding the vast majority of it. So the outlook for BYD looks extremely bright. In a recent interview on CNBC, Charlie Munger from the Daily Journal annual meeting, this was on February 15th of 2023, when asked a question on the outlook for the shares of BYD, he says the shares are now expensive, selling at 50 times earnings, 50 times earnings, but on the other hand, he expects sales to grow at about 50% this year. So Tesla has a very formidable rival, competitor in BYD in China, and this should be interesting to see how this plays out in the years ahead.